Hello, and thank you for joining us for this presentation of the business valuation. What is your now is the time need? This is OneSource Business Solutions. We are a business consulting firm offering business valuations, brokerage services, coaching, HR advisory, and succession planning services. We are part of the Smoker family of businesses, Smoker Company, CPA firm, Smoker Guard, the legal firm, Smoker Wealth Management, Keystone Credit Services, Smoker Realty, and Smoker Property Management, all part of our group. Thank you for joining us. My name is Mark Gagliardi. I am the general manager here at OneSource Business Solutions. I am joined today by Mr. Jeff Shelley, who is our senior business analyst. Good morning, Jeff.
Hey, good morning. Good morning.
All right. So just a little bit about my background. I am a former business owner myself, like many of you tuning in. I have actually started and sold 3 businesses of my own. I actually went into the public sector and ran corporate and private operations as well, with full P&L responsibility, facilities maintenance, et cetera, equipment purchasing and acquisition and speccing, design, all those great things. Jeff, why don't you tell us a little about yourself?
Yeah, so I have an accounting background. I worked for a local CPA firm for a number of years in their audit department, doing financial statements and other related services. And then I functioned as a controller for a family of transportation-related companies in the Lancaster area. And from there, I've come to OneSource, and I've been here for 12 years now at this point.
That's wonderful. And Jeff does a great job as our senior business analyst, as you can imagine, with his wealth of experience and expertise. Well, let's look at this first slide here. This is an astounding revelation as far as I was concerned. In 2018, Massachusetts Mutual Life Insurance Company conducted a little business owner perspective study, and it revealed that about 70% of business owners actually don't even have an accurate sense of what their business is worth. That to me was astounding. As important as your business is, to not have an accurate understanding of what that business is, nor even have the most effective method to have arrived at a valuation to begin with, was quite revealing. So the 5 benefits of getting a business valuation, of course there has to be benefits to that. This was information retrieved from Inc.com, which is a pretty famous, well-known publication. And look at that quote there. A business valuation provides the business owner with multiple facts and figures regarding the actual worth or value of the company in terms of market competition, asset values, and income values. So you're talking about the benefits, 5 benefits there. 1, of course, you'll have a better knowledge of your company assets. You have a better understanding of your company resale value. You obtain a true company value. It's obviously better to have during mergers and acquisitions. And then, of course, it will also afford you access to more investors. So you may ask, what are the valuation needs? So what are the needs for valuation? That is the whole premise of this presentation. There are many, and we'll go through each one individually after this, but just so you see what they actually are. You have business planning and expansion, buy-sell agreements, bank financing, obviously business disputes, litigation, settlements, divorce, mergers and acquisitions, buyout or buy-in of ownership interest, succession planning, which is a big one that a lot of people don't even know about. And then the other need is you just need to know, and we'll expand upon that in a little bit. But those are the needs, and now we'll get into each one individually. So planning and expansion, right? Everything's got to start with a baseline value. If you don't know the baseline value of your business, you can't do anything from there. Any type of future growth and revenue expectations, realizing your vision, creating a plan to achieve your retirement goals, nothing's going to happen without knowing where you're starting first. Jeff, you have anything you want to offer on that?
Well, no, that's accurate. And really what some people use evaluation for is for for their retirement planning. I mean, they might talk to their financial advisor and say, okay, you need X amount of dollars in your 401k. But obviously, if you sell your business, that's going to add to your retirement, assets that you have. So if you work backwards from what you feel you're going to need your business to contribute to your retirement fund, and then, okay, I'm going to retire in 5 years. Let's say you set that number, and we can do a little reverse engineering from where you are now to where you need to be, and actually say, okay, this is how much you need to grow the company to get to your goals. You can, do your traveling or have that time, when you retire. So, and make a plan to have that happen within a period of time. That's why getting it done early is, can be a good idea before you're even considering retiring or selling for some other reason.
All right, next is the buy-sell agreements. Okay, so obviously, in order to sell a business or buy a business, you need to know the value. The purchaser needs that information to corroborate versus any financials provided. Of course, I can sell a business for 400,000, but if I can't show the necessary information that substantiates that baseline value, then how am I going to sell it? Or how would a purchaser be even willing to buy it or wanting to buy something like that? Of course, banks and financial institutions are going to require it to meet their financing parameters. Jeff, why don't you talk about that pro tip there?
Yeah. Getting a valuation done, like I said, is earlier can be a good situation as far as planning ahead and before you place it on the market. As far as the buy-sell agreements are concerned as well, I mean, you may know the term operating agreement better. That's basically, obviously, the contract that you're in if you have a partner. And almost all of those dictate that a valuation has to be done if one of the partners want to exit the business, and they have to be done at least every 2 years if people would enter or exit the partnership. So once again, that everyone has an opinion about what their business is worth. Sometimes two partners' opinion differs a little bit, so having a third party who no skin in the game, so to speak, can come up with a fair number that's good for both people.
All right, so then we come to the magical bank financing. So, of course, not too many people are in a position of cash to be able to buy a business, especially if we're talking about hundreds of thousands of dollars or more, or even less. Depends on your whole situation. But, obviously, when you're doing financing, most of us know that loan to value is everything. If they're not seeing value in what they're offering you as a monetary collateral, then it's not going to be there. Banks need that justification and the history of the business, and Jeff will add a little bit more about how that history comes into play. But you're looking at meeting lending guidelines. Today, with commercial loans, a lot of times these loans are not being warehoused. They're trying to avoid the regulatory taxes and be more like an investment bank. They will underwrite them and they will gladly service them for the fees, but pretty much they're not going to what's called warehouse them. They will sell them in blocks to the investors. A lot of mortgages are done that way, which is why you might see your mortgage get changed over every few years. All of a sudden, it's a different company collecting your mortgage payments when they just retain the servicing rights. Or take them on, so to speak. So, Jeff, you want to elaborate a little bit more on that for me?
Yeah, I mean, I think that kind of covers it. A bank is going to look at a valuation. Once again, I look at the valuations that we do at OneSource, kind of as an independent report, as an audit report would be. So, the bank wants to look at the justification behind the price that we've put on that business in representing our sellers, and we do look at 3 years of history. That's typically what we do. We look at the assets and the liabilities that might accompany that sale, and then also we look at individual characteristics of the business that would create a multiplier, which I'm sure a lot of folks have heard about. But there is a certain way of doing it that we come up with a fair number, getting the most that we can for our sellers, and then also working with financing, of course, if that comes, and doing bank projections and that type of thing for the company to make it work.
Okay, Jeff, go ahead with this one.
Right. So a number of the reasons why people look at valuations, and sometimes it's good to at least have a conversation initially before you really need it. It's I hate to say, but it's kind of like having a will before you need it. You never know you're going to need it until that time comes. And certainly this is a little bit of a different situation. But obviously for an estate, a third-party valuation must be done. If a real property would be transferred, a house or something like that, and that would be placed into the estate and then willed out in some form, there would have to be an appraisal done on that. and the IRS will look at that for reasonableness and make sure that it makes sense. We do look at each situation individually. The IRS does allow us to take certain discounts depending on the type of business it is and the type of transfer that's happening. So we do valuations for the IRS on a monthly basis, taking the appropriate discounts that we tend to lower, any inheritance tax that would come into play there. So we do look at that. Also for divorces, we've been involved in a number of divorce cases. We work with the counsel, the person that we're working with. It's key that we follow their lead. We revised valuations to make them a little bit clearer for the judge to read. We also review valuations for opposing counsel too. If they say, well, hey, the other spouse, they have an advisor who came up with this valuation, we also can look over that and give our thoughts about why it may or may not be an appropriate valuation and have ours placed aside of that. I'm always confident that our valuations will hold up in court. We've prepared for testimony in front of judges before, so we're capable and certainly can do that. The intergenerational family gifts, once again, that's similar to an estate. The same taxes apply, as you know, probably. So once again, we're able to take certain discounts that if mom or dad wants to maybe sell 50% of the business to a daughter or son, and then give 50% of the business to help them out, which is, I always think, a great idea to do. We can assess the value on that once again to lessen any or lessen or minimize or totally decrease any gift taxes that would happen there, which happens over at a pretty low amount. So we can make sure that that works out. And of course, any legal disputes or challenges that could be partners who might not be happy after the dissolution of an operating agreement. We can come in and kind of bolster whatever value that they came up with in leaving the business. Or even another way of looking at that is, getting some counsel a little bit ahead of time and an evaluation done a little bit ahead of time can avoid any of those disputes down the road because we've made those decisions before time.
Wonderful. Thank you for that valuable advice. No pun intended.
So mergers and acquisitions, that's what we do on a daily basis here. So we work with that in a number of different ways. It's, we're talking to business owners today. So obviously from a selling standpoint, you want to make sure we only represent sellers here at OneSource Business Solutions. We've, in the past, we have represented buyers on occasion, but we find that, we don't want to divide our loyalty and we only represent sellers here. Our goal is always to get to not leave any money on the table. From a company-wide standpoint, we always have a goal of at least achieving a 95% take-home rate of the price that we place on a business. So we try to get full price as much as possible. And honestly, in the environment that we're in and the location that we're in, as far as the country is concerned, we get full price about half the time if the value is done properly. So from a selling standpoint, you want to make sure you don't leave any money on the table. And then from a buying standpoint, obviously you cannot price something so high like Mark referenced that it's not affordable. Obviously, if a buyer comes to us and we have a business that's crazily overpriced, no bank is going to give them money. And if by chance they have the money in their pocket when they come to us, or borrow it privately, they're not going to be able to make a go of it because the cash flow won't be there. So we try to make that mark in the middle that that is beneficial for both sides, and get it done for them.
Great job. Thank you. All right. So next we have some things that Jeff touched on before as well. So, buyouts in a partnership or other relevant ownership interest, or buying in, buying you out, buying in as a potential partner for yourself. You're going to want an absolute valuation done. So why don't you speak a little bit about Jeff, about that, Jeff?
Yeah, I mean, once again, the operating agreement being fair to someone who you've worked with for years, by your side, to making sure that both parties are treated fairly, and then that you can, both of them can walk away and be satisfied with what they did as far as either selling their portion of the share or buying out the other partner.
Sometimes things aren't perfect in this world, and things happen.
So succession planning is, once again, that we touched on that a little bit before. I always, sometimes I say, I've seen it honestly so many times that entrepreneurship, sometimes that skips a generation, and the son or daughter might not have all of the chutzpah or whatever that one of their parents had. So, when we want to make a fair price for each of those individuals, I talked about the retirement aspect to it a little bit, making sure that at the end of the road, when all the expenses are paid and the business is transferred, the seller has enough money if they're going on to retirement, that they have that funds. I referenced, once again, maybe visiting that a couple years beforehand. I remember we had sold a transportation business several years ago, and the gentleman that owned it came to us and had a valuation done, and he said, "Yeah, I'm going to sell it sometime in the future. I'm not sure when." And in the interim between when we met him the first time and the second time, he had changed the business name to make it much more of an appealing business. His name was involved in the prior name. He took his name off of it, gave it a great name that kind of spoke to what they did, streamlined his operations, and we repriced it probably 4 or 5 years later when he came back to us and said, "Okay, now it's time to sell." He wasn't looking to retire, but he had health issues and wanted a little bit of an easier path. And so we looked at it. The valuation had gone up $250,000. He had streamlined it such that another owner could step in there and just take the reins from him and operate it. And so that's kind of how looking ahead a little bit, he could plan how much money he needed to take out of it and streamline the business, which we helped him do a bit as far as making it more attractive to a potential buyer. What we do when we look at a business like that, looking at the financial side, the operations, the marketing, the human resources, and so forth. And once again, kind of bringing the buyer in on that once we find one to make sure that it all works together. And once again, we talked about inheritance and passing it down before, minimizing any tax effect that you have there, be that an inheritance tax or a gift tax, whatever that might be. They kind of function as in the same way.
Thank you so much. And again, succession planning is kind of a multifaceted subject too, because you've got the other side of it where, you have to make sure that you're ready for such an undertaking. There's a lot of hard questions that have to be asked and a lot of issues. The realization that you're planning for your possible death or incapacitation, or, are you ready to have somebody else take over the range? So there's a lot of psychology involved in it as well. And it's a great subject and quite an undertaking for us to help and benefit our client. So circling back here, right? So 70% of all business owners don't have any real sense of the value of their own business. We know that from that study that was done in 2018. How important is it to know the value of a business? How important is it to know anything of what supports your life and your lifestyle and supports your family? Of course, it's paramount. I'm sure that if I surveyed people that are watching this presentation or others, you would pretty much know what the value of your house is worth, especially today because housing is skyrocketed. You'll probably know what your car is worth. I know you're going to know the value of your life insurance policy, and I'm sure you're going to know the value of your 401k or any possible inheritance you may be entitled to from someone in a passing event or whatever. So the business is one of the most important assets you will ever own. Obviously, it supports you, your family, your lifestyle, your livelihood. It is imperative that you know what that current value is now and at least every 2 years moving forward. That's professional advice. That's widespread. So the whole end result of this is, and this exercise basically, is that no matter what your need, now really is the time when you think about it. So OneSource Business Solutions, of course, I told you about our processes. We told you about everything that you can see as far as needs go. We can provide an expertly prepared, comprehensive, in-depth business valuation. You heard Jeff speak. He is well-versed in this and an expert analyst. It is entirely tax deductible. It is a peace of mind exhibit to have. It's important to know. It's absolutely essential to have. It's, again, the investment that you need to make. Jeff, anything you want to just throw in there? Or?
Well, just to kind of piggyback on what you said a little bit, Mark, it's like, I always liken it to when I meet with a business owners, if not at least having not having a business valuation done. Certainly, you don't have to do this every year, but looking at the value of your business as it continues down the path, and not doing that is kind of like getting your investment statement on a quarterly basis from your broker and just throwing it in the shredder right away without even looking at it and saying, "Gee whiz, this is down and this is up." And for most people that we work with, their business is it may not be the absolute most important thing in their life because they have family and church and community and so forth, but it's a lot of times the most valuable thing that they have. But they're too busy working on it on a day-to-day basis to understand that it really does have value, and it can play an important part in the rest of their life when they decide not to become a member of a part of their business any longer.
All right. So we talked about the business valuation, how important it is, what the need is, and the need is always present and ready and apparent. INNP is a very large business valuation and forensic auditing firm located down in Texas. They had an article that they had published that pretty much talked about fair business practice cost range of a comprehensive business valuation. It can range anywhere from $3,000 to $30,000, depending on the intricacies of that business and what the parameters are. Every business is different. Some are very, very involved with other holdings and other assets and stuff of that nature. For the most part, for a small business owner such as yourself who's probably viewing this, we're talking about that we can do this for less than all of that at $11.50. Again, it's an investment in your business. It's definitely an urgent need for almost everybody out there watching this. And if you are interested, please contact us today. Again, I am Mark Gagliardi. This is Jeff Shelley. Our contact information is here. You can go on our website. It's very easy to follow those three little clicks there, and you're ready, and we'll respond to you in good nature and in a timely fashion. Thank you so much for watching, and on behalf of myself, Jeff Shelley, and OneSource Business Solutions, I hope you have a wonderful day, and thank you so much.
Thank you.